go. Hump day.
Yeah, Hump Day. Yeah, we'll have a check out what Hump Day may offer us. See what's going on out there. But
How's that high going with our sentiment cycle that we mentioned yesterday, mate? Be pretty close, wouldn't it?
pretty good. Pretty good. Yeah, let's have a look at that actually. So, good morning, everyone. By the way, good morning, Jeff.
Morning, Ash. Morning, all.
We are looking at a FTSE 100, which is easing back to the downside now. Some of you that I hope you're not in the long anymore, and I show you why where the long should have been closed off. But it doesn't matter if you are in the long because you're still in profit, so you just want to get out the long, and we are flipping positions at this particular point, this particular juncture. But your long should have been taken off when it did start to suggest that this hourly trend to the upside was breaking. So you're not going to be too far off that price if you close it in the next few minutes. But your long should have been taken off there. Now it does mean all there actually. That would have been better. I didn't take it off there. I took it off here. Because that just gives me the extra safety. But you can see that there's a level up here as well, which gives us this rising wedge with a bit of a false breakout. But it came within that rising wedge. Now we've got that rising wedge breaking down. Rising wedges are bearish, so with a rising wedge breaking down, then you see this bar. Another opportunity really to take your trade off the table. Wouldn't have been a big deal taking it off after that as well. But we are now looking for the short. Now I am in the short, but I've also put some more positions to go further short and stack right in at 56.40, which on your options will be where's the UK? Where are you? There you are. 56.40, so for at 56.90, so it's about 50 pips up. So you're looking at 56.64 or 56 65, somewhere around about that position there. I'm not sure what the UK 100 looks like when it comes down to pivot. Same thing actually. Just want it under the pivot. Yeah, go at 56.60 for the short. So stacking in there looks really good. You got the bar now that shows the reversal. These bars do get these areas do often, not always, but often get tested out anyway. So there's no reason for us to suggest we'll miss that particular entry. But we definitely want to look at the shorts now. And if you close out your long at the same price, even better. Even better. But that's what I have done. I've closed the long, and now I am looking at the short. So I've got my orders. As I say, I did go short at this point here. So I don't take off my long at that point just yet, just in case. But I start to stack in here, put my one short on there. Then when things really set up and I break out of my my pattern, then I can stack in my shorts. And I would have gone on this bar, but I missed it by 10 minutes. So now I've just got limit orders in the market to see if I can get triggered in as it comes back up again. I won't worry about it if it doesn't, because good morning, Sanka. Because I'm already in for some positions anyway, but it'd be nice to stack into this because this is looking really good. Okay, so that is the rundown of the FTSE this morning, mate. We can go straight to the pound. Should we do that next?
Sure thing. We can, and we shall. So let's do it. Loser yesterday, not a full loser, and that's the beauty of trading on a small time frame, of course. But we'll go through that in a little bit. That was our entry there. Yes, shocking entry, as I said. You wouldn't take that if you were being an honest person with yourself, because you're just not going to trade into that level. Maybe you can pick it up down here and get it in profit before there, but no, you wouldn't want to take that. All right, to today. And we've got a genuine range in this bar, pretty much. The high of the range, the last 3 1-hour candles prior to London session are these, 1, 2, 3. And the high is above that bar. We'll set that one first. So we're going long, 15 pips above the high of the the range, which is here and here. The high of that bar is 1.23426. We'll call that 1.2343 and go for an entry at 1.2358. So it'll be a buy stop at 1.2358. And our stop loss will be 10 pips below the low of the range. The range low is the low of this candle. It's going to be a fairly decent old range, this one. 1.22878 becomes 1.22887, and 10 pips off that is 1.2277. Oh, it's not that bad. 1.2277, and we can place that. 2277 and 2358, I think I said. All right, so let's set the short as well. So the short is a sell stop at 1.22, forgotten, goodness me, isn't that bad? 77, right. And the stop loss, 1.2348, did I say? Let me just check that. 5.8 maybe. There's the high, not even. Oh yeah, 5.8. Okie dokie. So there's our entry long and our stop short, 1.2358. There's our entry short and our stop for the long, 1.2277. And in terms of where do I think this is likely to go today? No bloody idea. Really no idea.
With a pound, yeah.
Yeah, it's difficult. And I'm not sure how much of it is Boris Johnson.
Well, yeah, I mean, there will be some element of that. There's no doubt. You know, he's I think he's out of intensive care and he's breathing without a ventilator. So that
Is he?
that
Okay.
one,
Yes.
Yeah, he's doing okay by all accounts. I mean, you know, he's the leader of the country. So for Boris Johnson, you know, for a leader of a country to get knocked out in any way, shape, or form is always going to be negative for a currency. I would guess. So you know, it will make a difference.
Yeah, I would guess. Yeah.
Yeah.
But then, you
so
know,
we'll
it's
see.
funny times, isn't it? We really have got leads coming in off fundamental things, and somehow sometimes they just go in the completely the opposite direction that you think from a logical point of view. So, yeah. Tough call. You can see, of course, that we've gone into a fairly decent old box range here. We might as well put that on the chart. It's probably somewhere through here somewhere. And we're bang in the middle of it. That makes it tough. We're on a resistance trend line and we are at the monthly pivot. I've got a sneaking suspicion this is going to burst to the upside, but I don't see a trade there for me. This is just like crotchets on a, what do you call those things?
Usually a stave?
Stave. Crotchets on a stave. There you go. Maybe even a semi-quaver in there somewhere. I don't even know what they look like, but that's kind of what I think of when I see something like that. Sorry, I can't help myself.
Yeah.
Would that be right? Something like that. Am I even close?
Yeah, well, but no, that would be okay, mate. That would be okay. Let me just see what's I wasn't looking at your chart. I was just checking out my charts here. Where we're looking at the blah, blah, blah. Oh yes, yeah. 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 I'd say that's pretty good. Look like semi-quavers.
It'd be awesome if it related to trading. I'd really like that, but it doesn't. It's got nothing to do with it. So we probably better leave that alone. If I'm honest, then we've come off the bottom and we really haven't put in a higher low. So maybe that's under construction here. It's not a bad place to be either on the daily pivot. So I'm a little bit bullish, but I don't really have a reason to trade at the moment, except to go long above that bar there. It's the only thing I can see. But the risk reward is really up to putty on it. 85 odd pips to pick up 70. Yeah, look, it's not the worst. And if it does break out, then holy dooly, we're talking 10 to 1. Maybe it's not the worst thing in the world to do. Let me get a little bit more context. Really have had a higher low here, I suppose. Very shallow retracement, though. Very shallow. But it is a retracement, 23.6. I think we might have a little bit of an investment here, Ash.
Okay.
Pound long. And we're going to trade this bar here. We'll get our stops pretty much where the stops are. So this is not the breakout trade, guys. And we'll go to my analysis account, place this one. It is on a 4-hour chart. So we'll go there. And if you are, guys, if you are trading the breakout, and if you are, I hope it's at really, really, really small risk, because we're in beta test mode on that, don't forget. Do not aggregate your risk any greater than, say, 1/4 to 0.5%. So in other words, if you've got anything at all on the breakout, be very, very careful here. You don't want to put yourself into a high risk situation. So we're going to trade this bar here, and it will be a buy stop. And the level will be 23.70. That will be our entry. So actually 7 pips before the breakout. 23.70. And the stop loss will be, I'll get underneath the current bar, which gets us underneath the daily pivot. 1.2281 will do. 1.2281. And we can whack that in the market. Okay. Oh, that didn't work. What's going on there? Hang on a second. I'll just get rid of that. Delete. What did I do wrong, Ash? 1.2281 stop loss.
Sorry. I've got my eyes on this foot here.
Oh, because I've got the stop loss lower than the entry. Okay, I get it. The entry should be 1.2370. It is. Stop loss should be 1.2281. Why? Oh, because I'm trading this bar, yeah? That's all good. Why does it look like that? 1.24, that's why. That's why. I'm 100 pips out. That still doesn't look good. There we go. I've just got a silly line in here. I couldn't see my entry. Okay, it's all good.
There you go.
I've got a silly line in here that was throwing me. All right. So let me just make sure we've got this right. The entry is at I was right the first bloody time. 2370. Glory be. 1.2370.
When you've done that, mate, we probably should put an order under the current bar on the FTSE as well, just to make sure that there's a chance we can get the entry.
Go, mate. Go. We're done.
Okay. All right. So, as it happens, I've got a. I didn't realise, mate. And I apologise for this. I've got a meeting at 8:30 as well. So I've just got a message from the the guys on that. But let's deal
problem.
with this. Yeah, so we might, and we'll deal with what happens in the US show in a moment. Okay, so what we're looking for here is this limit order to either be triggered. I'm a bit concerned that it may not be triggered, but it's not too much. It won't be too much room between the 2 points. It's going to be about 50 pips, which in this market isn't too bad. So an order under this bar is still valid. So you can either take a stop order under that bar, and if that triggers, cancel the top order. And if the top order triggers, then you're going to cancel the bottom order. So we're either going to enter here, or we're going to enter down here. Obviously, this would be better. I mean, it might even be that considering that's the high and that's fairly close, we might have to do the top end of this bar instead. So either the top of the bar or the bottom of the bar is the trigger for this trade. Now, as I said earlier on, you should be out of your long now. You should have taken profit on the long, and now we're looking for short. So we're gonna. This is the current hourly bar. We haven't hit the first 15 minutes just yet, but let's see what that looks like. Oops. There we go. There we go. So that's the current first 15-minute bar. So really, you're going to be entering on the 15-minute bar. It's either this high or the low. Now the high is around about 56.30, which is 10 pips away from where my preferred entry would have been anyway. So it's not too far. But the low is going to be a bit further back from that. And there's a few ways you can play it. You can just put your stops right on the highs there, which is about 100 pips. If we get this particular one, it's going to be about 60 pips. Or you can go above the whole range. It's still got to get through the daily pivot, so stops at this particular level wouldn't be too bad. Now, if you get taken out there, then really, in my opinion, we are still looking at the shorts. So it's just going to be a case of do you wait, just waiting for the next setup short and going in. But as I say, it's got quite a lot to get through or a couple of things anyway to get through to take out this high here. So stops above that level, entry at the top of the bar or the bottom of the bar. It just depends on which one triggers in first, and then let the trade run, and then we'll see where we're at after that. So maybe some reasons as well. If you guys need more detail on that, then let me know.
Mate, bit of choppy this morning through the markets, and
yes,
we saw the Aussie come off. We saw, in fact, it seemed to be a bit of a flip flop from risk on to risk off.
Yeah,
but I don't know if that's going to last. It seems to be truncated or brief.
This seems to be what we're waiting for, is the FOMC meeting, the minutes of the meeting. So it might be another one of those days today, mate, where we just I mean, to be fair, yesterday we did actually take off to the upside, but this may be some of the issue here with the FOMC. So we might be looking at FOMC minutes before the market really moves, and there might be some speculation going on around that, which that it does make stops a bit trickier. Now with this kind of particular entry, I really like it. So it's not, the scaling doesn't happen for me here. I have gone short up here, and I've got a few shorts in the market lower down. Obviously those ones are losing at the minute, but this one's winning. But what I want to do really at this particular area is load in. So this is a full percent trade at this particular point, full percent minus the entry up earlier. So between this entry and the rest of it will go on here, because I really like the setup. I really like the way markets go, the way the market's going. And that setup really comes from looking at longer term timeframes first, which I'm going to show everybody. Yeah, this setup comes from longer term timeframes first. So, coming right out from the monthly, we're obviously looking for downside. Weekly, we're obviously looking for downside, and we are in an area where there's some resistance. So I still would be quite happy to protect the shorts if the setup doesn't work. And the thing is, it's a lot lower than I want to get in. There's no doubt about it. I want to get in up here, but the setup is in existence here. And the way that I trade my strategy is if the setup happens, no matter where it is, then I load in. And then I'll deal with the consequences after that. And it doesn't mean that it's going to work out, because I'm actually in down here somewhere. No, around this area, I think I'm in some shorts as well, because that's where my setup happened. But as the market popped up again, I'm doing the same thing here. So the daily chart, just going back to the analysis of the longer term timeframes, the daily chart does have this cup and handle that we were discussing yesterday. Better seeing it on the 4-hour chart, but the cup and handle will have an area of resistance, which is the neckline, and these patterns only work out 1/3 of the time. So there's every chance that this does actually fail here, rather than going long. We do get this
Mate,
spinning
we also
top.
spoke about the sentiment cycle there yesterday, and how
Exactly.
that high was probably a good point to be looking for a short, didn't we?
Yes, absolutely. Now, we talked about the spinning top yesterday as well. We know how the market was indecisive at a specific area, and that was really on a 4-hour chart. And the spinning top is appearing here on this daily. So it is suggesting that the market may still move to the upside, but indecision in a downtrend still has a greater likelihood of failing than going. What we want to see here is further bullish price action, and that's just not coming in. It's indecision and actually slightly bearish. So the longer term timeframes all suggest that we're still looking for downside, and now we're just waiting for a reason to go short. Now with this, what we have is effectively the top end of a channel on a 4-hour chart. So all I'm trying to do here is pick it up at the top end of a channel while using some of the shorter term timeframes, namely this hourly and 15-minute to get my entry. And when you look at the pattern here, the pattern is head and shoulders. So we got the left shoulder there, right shoulder there. If we enter along this area, then we are entering on the left shoulder head, and the right shoulder's here. So if we're entering somewhere around about here, we're kind of entering on the top end of the shoulder, which means the neckline's down here. Opportunity to take profit if that's what you want to do. Now, the reason I won't do that is that I'm looking at a longer term time frame and seeing if I can pick up the start of a big move down. So the hourly is shaping up. We got a lower high here, neckline here that is far enough away from us to justify an entry. And then when we come down to the 15, we've got this something similar with a trend on the 15. But the other thing that I was looking at yesterday was this trend line there. And it's coinciding beautifully with so many things. There's a lot of confluence here. We've got a trend line break. We've got a shooting star. We got an evening star pattern as well, which is this 3-bar pattern where the 3rd bar ends up below the first of the 3-bar pattern. And on top of that, we've got a load of pivots. So there's a lot to like about the setup here, which is why I'm quite happy to stack in. Now, when I get confluence, that's when I want to stack in. If I'm speculating somewhat because I've got a decent price, like the bounce off the pivot gave me my first entry, which I can show you here. I don't like loads of lines on my charts, but you can see that my trade here, that was my first one there. That's my first sell there after I see the bounce off the daily pivot. So, but that one goes in really light, and because it's a speculative trade, because my overall view is for downside. But now I can start to load in, which is why I've done what I've done, and I have started to load in down here. So that's the idea here, mate. We're just looking for downside. We're just looking to load in. Yes, I am.
Yep.
Yes. Just to have short on 15-minute top consolidation, on 15 top consolidation. Yes, it is. The price action is fantastic. Yeah, sure. So the hourly entry, it all comes from going further out. When you say the hourly entry, do you just mean just the final part, or do you mean the whole reason behind it? The hourly entry is really the final part, where I'm looking for a break of the trend line, which has happened. I'm looking for a bar, which has happened. I'm looking for as much information as possible that suggests that we have reached a level of resistance. That's
I think
one.
Lexi was looking for the level, entry level, perhaps.
Oh, sorry. Okay,
That's
the
all
entry
right.
level on the UK 100 would be around about 56.60, around about where your daily pivot will lie. So around about 56.60, but we may miss that. So what I've done here, or what I would suggest doing here, is looking at this 15-minute bar and putting an entry on just below it and just above it as well. It's only about 10 pips away, which would be about 56.50, I guess, the high end of it. But it might actually come up and touch it. I don't know. But either an entry here or an entry here, and one cancels other effectively. If this one triggers in short, then this, take this one off the market. So you can look at your 15 and take the entry off that. But yeah, somewhere around about 56.60. So if I bring up the UK 100 instead, you're only about 10 pips away. 56.50, there it is there. So here is fine. Anywhere around about here for an entry is fine. There you go, 56.52. So actually the higher the bar is 56.53. So that's going to be 7 pips away from where I'd want to enter anyway. But it's so close to the daily pivot. There's every chance it comes up and tests that pivot at 56.60. So that's why the entry's on that. But the bar has provided resistance already, so maybe that's as high as we go. We have gone through the pivot as well. Double cross, Jeff, or not?
Sorry, mate. Show me chart.
Is that this one here?
I'm having a look now. Where's your pivot? Oh, okay. So your pivot. Yeah, it could well be. Yep.
Yeah. Okay. So might even have a double cross slingshot entry there as well. So there's basically we want to be in. We want to be in, and we want to be stacked up here. That's anyway what I've done. I've stacked up here, and I've got I haven't put stops here because I trade slightly differently, because I will look at another leg up. I'll trade it another leg up if needs be. But having a stop at this high here is a really good place to try and get it, and it looks like it's going to be around about a 60 pip stop loss, and there really is an opportunity to take advantage of a really good move. Because the thing is with this as well, if we stack in here with all positions, the idea will be to take off positions on the legs to the downside. So there's effectively looking at 3 areas that we can start to scale out of the market. So we think about them in 3 positions. Looks like that's going to get triggered in at some point. 3 positions in the market. So if we think about this on a 4-hour chart again, we can take 1 position off at the low. I'd want it to come down to the bottom end of the channel. So we could take 1 position off there, leave the other 2 run, take 1 position off there, and then see if it goes through with our 3rd position. So if this is 1%, then a 3rd comes off here, a 3rd comes off here, and the final 3rd goes, I know it's not quite a 3rd, but pretty much a 3rd and a 3rd, if you like. So that's the way I'd start to scale out as well.
But I would trade that 99 times out of 100.
Yeah.
From my slingshot point of view.
Yeah.
Because my analysis tells me that you've got a lower high off the top of a range. That's what it tells me.
Yes. Yeah. It looks pretty good to me. It looks pretty good. So let's see how it unfolds. Let's see if we get it. And if we don't, then we'll come back and fight another day. No problem, Lexi. Sell limit, yes. Sell limit, but you should be in now anyway. If you like the trade, then really everybody should be in this trade to the downside now, and then we'll see what goes on. Now, of course, you can add. That is another way to do it. Which bar and which time frame we trading the pound dollar on, mate?
Okay. Would you like is that the breakout trade, or is that the my analysis trade, the slingshot trade? Or maybe Ace, you weren't in the room. I don't know. I'll go through both, shall I?
Yeah, go through both. If I get called, all I'll do is I'll mute my mic on this.
Yep.
So you can continue.
All right, mate. Happy days. Both. All right, Ace. Let's do it. Okay, on the breakout trade, which everybody should know by now if you've been in the room for some time. If you haven't, then let me explain it to you a little bit clearer. On this chart, pound US dollar is there. Okay, so the trade is this. On the hourly chart, what we're seeking to do is play, let me get rid of these because they're not applicable to this chart. What we seek to do is trade the breakout of the last 3 1-hour candles prior to London session. So in this case, these 3 candles, the range of these 3 candles is the high of that bar and the low of that bar. So low, high. Once we've established that range, what happens is we place an entry 15 pips above the high. So a buy entry, 15 pips above the high of the range, which in this case is this bar. So that gives us today an entry level of 1.2358. And we place the stop loss 10 pips below the low of the range, which in this case is this bar. And that stop loss becomes 1.2277. Now, at the same time, we also place a short entry at the same level as the long stop loss. So in this case, today it's 1.2277. That's a sell stop. And our stop loss is exactly the same as the entry for the long order. So in this case today, that is 1.2358. Does that all make sense? Now, once we are triggered into either trade, if it's the long we're triggered into, we cancel the short. If it's the short we're triggered into, we cancel the long. Once we are triggered into the trade, we then change to a 15-minute chart and we trail 2, if we're going short, seller bars, if we're going long, buyer bars. Let me explain that by going through yesterday's trade, right? So yesterday's trade was, this candle's always the same 3 candles, 3 prior to London Open. Yesterday, it was this candle, I think, hang on a sec, I can't remember. No, it was this candle here, and this candle here. That's how you choose the bar, Ace. You take the last 3 candles prior to London Open. On my chart, that's going to be, pardon me, the 9 o'clock bar, the 8 o'clock bar, and the 7 o'clock bar. Once you've established that range, let me just move the line here. So we've got this bar, this is yesterday, this bar, and this bar. So the short goes 10 pips underneath that line, that being the low of the low of the 3 bars prior to London Open, and the long entry rather goes 15 pips above the high of this bar, which is the high of the range of the last 3 bars prior to London Open. So do you get that part? That's the range. Low of the lowest bar, high of the highest bar of the last 3 candles prior to London Open. Okay, let me get rid of some of these lines. Once we've established that, we then go to this system, and that is entry which was triggered by this candle here. We then switch immediately to a 15-minute chart and cancel the short, by the way, because we got triggered long. And we go to a 15-minute chart, and here we see that we were triggered by this bar here. That's the bar that took us in, right? As soon as we're taken in, we cancel the short and we look for 2 buyer bars in a row. As soon as we see 2 buyer bars in a row, we move our stop loss below them. So we've got 1, 1, 1, 1, 2. As soon as we've got 2 buyer bars, we move our stop loss from where it was, which was down here somewhere, to there, exactly where price is right now, as a matter of fact, underneath the 2 buyer bars. And that's as good as it got for us yesterday. So we took a loss, but by trailing our stop, our loss was reduced from whatever percentage we're trading at to, I think it was about half of that, to be fair. That's the whole premise of the trailing stop, so that if we do get taken out, we don't get taken out at full loss. And if we're going long, if the market continues to go long, then we're trailing it. We give it a chance to keep going and going and going. So I hope that makes sense. And you've now got the entry levels for the breakout trade for today. The other trade that I've placed is my own trade, which is my analysis of my system of trading. And we're going long on a 4-hour chart. And I'll give you the levels for that one. We're going long above this bar here. And the entry level is not telling me anything. Why is that? That's a bit sad. Oh, there we go. 1.2370 is the entry for the H4 trade. We're going long here. The stop loss for the H4 trade that you can see here is at 1.2279, I think it was. Sounds about right. So there you go. They are the 2 different trades that we've got in the market. One is trading the breakout of 3 bars. The other one is trading my analysis. My analysis tells me this is going to break to the high side and take on these highs one more time, and hopefully for the trade, break through it. Now, if we get a close below the daily pivot, I may reassess this, but until that happens, we'll still leave this order exactly where it is. In terms of take profit, in case I leave you before that occurs, and that's highly likely at this point, that's the area I'd like to take first profit. I'm going to drop that down to DR1, I think. So we're not going to take too much profit off the table here before we, sorry, we're not going to get too many pips in the bank before we take profit. So 1.2413 will be our first take profit level. Okay, 1.2413. Now you can be safe and take half of your position off at that point and move your stops, whatever that is in terms of pips. So it's a roughly, let's say 35 pips. You could then take 50% off that and move your stops 35 pips from entry, which would get you into about, yeah, it's above the monthly pivot, probably not the best idea. I'd still like to keep your stop loss below the monthly pivot, but that's entirely up to you how you manage that. What I will do, I'll take a third off at that point. I'll leave my stops exactly where they are. And if they come back and hit me, then I'll take a small loss on the trade. If we go long here, then I'll manage that as I see fit, basically. And I can't tell you what that will be until it actually happens. Most likely, our second take profit will be, well, at a resistance level if we can find one, basically. So there's our first take profit level. Our second take profit level would likely be around about there somewhere. Why? Because it's been support and resistance in the past. No reason to think it won't be in the future. So 1.2567, that gives you another 150 odd pips from between TP1 and 2 and just let the rest run. I'd take a third off at that point, move my stops to entry at that point, and let this go if it's going to go. And I'd probably exit just before these highs. MR1 looks to be a decent net exit around about the 130 to 75 mark. So there's plenty available there if we can get this right. If not, then hopefully it doesn't take us into a bad trade. Okay, look, there's so much to look at. I just don't know how to explain it, to be fair. Let's go for the trades that we are currently in. And those of you who aren't in the Telegram group, you need to do that. There's the address for the Telegram group. It's absolutely free to go into there. What that gives you is not only Ash and myself, our analysis on all sorts of different things, but basically trades. There are also some senior traders who post into that group who will give you trades, analysis, fundamental updates. There's all sorts of wonderful things available to you in there. Put your notifications on. If anything takes place, you'll be notified of that. That's all for free in that particular address. I'll have to read it out because it was a little bit, actually, maybe if I make that white, that would help. And I can't post it in the chat, guys, because YouTube won't allow us to do that. That might be a bit better, might be a bit clearer. I'll read it out one time. It is the usual https:// small t dot small m small e / capital L small e a r n capital T small r a d I n g capital F small o r capitals F capital R capital E capital E. So that is the Telegram group. And if you go into there, you'll see what's available clearly. Hi, PL. What do you think about Euro Aussie H1 chart? Looks like it's going to break both moving average and go down. What's a moving average, PL? Just kidding, mate. I don't use indicators. All I use is pivots and trend lines, mate. So I'll give you an analysis on that in just a tick because I'm just about to move on to it. The reason I'm just about to move on to it, we are short pound Aussie, guys, and we've been there for a few days now. Traded that bar, and it's really had a little bit of an issue today, the Aussie. And the reason for that is because those scumbags at Standards and Poor decided that they wanted to re-rate the Aussie dollar, the credit rating of the Aussie dollar. And that moved from AAA to AAA. So it didn't move, right? But there was a downgrading inside that AAA. They have gradings within gradings, and the AAA positive, actually we weren't in positive. There's a AAA positive, a AAA neutral, I don't think they call it neutral. I can't remember what they call it. And a AAA negative, stable, that's it. So the Aussie dollar moved from AAA stable to AAA negative. To me, still AAA. So I'm more than happy to hang on to this position. The market didn't like that too much. And you can see it came off its lows and went to the monthly pivot. I'm hoping that the monthly pivot is strong enough to propel it back down to our second target area, which is at 197.42. And I've got absolutely no reason to think that that won't happen. And I'm more than happy to stay in that trade. Where do I think we're wrong? Well, if we get a close above the daily, the monthly pivot, sorry, I think we're probably wrong here. But until that happens, let's keep that target area in mind. If you want to trade pound Aussie today, it's a little bit tricky because of what I've just said, and the market through UK session so far has deemed that this rally was not uncalled for, but maybe that's as far as it needs to go. That's how I'm reading current price action anyway. A lot of indecision since we got to the monthly pivot, and so far there's a little bit of selling that suggests that the Aussie is still going to be a stronger currency than the pound throughout the next few weeks or whatever the case may be. I'm hopeful that will be the case. We're also in Euro Aussie short. So back to your question, PL. What do I think about the hourly chart? Was it the hourly chart? Hang on, I've got somebody trying to Facebook me over the top of your question. H1 on Euro Aussie looks like it's going to break both moving average and go down. Look, I hope you're right, to be honest, but let me analyze this just a little bit further. So our bias is obviously short because we're short, right? The daily chart is telling me that this little rally that we got back off this 176.80 level, I think it is, around about where price is now, couldn't be sustained. And we went into consolidation there. And as soon as we broke through that, I've got every reason to think that this will continue and find a support level. The good news for us is, where the heck is that? There ain't none. I'm on a monthly chart now, and this is tantamount to and part of the reason that we took this trade, because the reward is absolutely substantial if we get this right. The first support level that I see is around about 165.89. That is a truckload of pips away from where we are. Let me count the ways. Another 1,000 odd pips. And we risked, what did we risk on this? I can't remember now. We traded this bar here. So if we're right here, we risked 90, well, let's say 100 pips. And if we pick up, we've already picked up 230 pips. Well, we took profit down here, but we've actually picked up. So we're 1,200 odd pips for the sake of 100 pip risk. That'll do me. I'll be happy with that. That's a good start to the month. Absolutely. Look, no guarantees it happens, of course, but if we do break these lows and continue to break lows and go into or resume the downtrend that really hasn't quite established itself, I've got to say, after this massive rally up all through the early part of the year, then we'll have a pretty good smile on our face if that's the case. So I didn't really say what I thought of your question, did I? Sorry. So the hourly chart, moving averages, no idea where they are. So they don't mean anything to me. The one thing that concerns me a little bit here is that we are now approaching what could be considered to be a left shoulder here, but maybe that's it there. Maybe we're there already. So maybe this is going to be the tail of the tape. And by that, I mean, if we get through the daily pivot here or through this level now, I think we're probably in a pretty good space. I don't see anything, if I'm not in this trade, to want me to trade at the moment, though. I've got to say, I've got to be perfectly frank. The chart's telling me that it's got no idea. We've got high test, low test, low test, high test, low test, high test. The market's in pause mode from my point of view, but there's a market structure here that could change everything. And if we got to bounce off the daily pivot here, the very first thing I would do is find the neckline of this head and shoulders. And if it's that's the shoulder, or that's the shoulder, let's say that's the shoulder, and we find the other shoulder over here somewhere where we're currently having a little bit of a dig, then there's our neckline. And if that's our neckline and price were to get above it and retest it, so suddenly I'm a bull, not a bear, because that's a very strong and potential reversal of this rally scenario. And let's face it, momentum would suggest that, trend, if you like, would suggest that we are going to have another look at these highs. And, you know, if I pull a fib on that, for instance, I think you'll probably get excited because we're at bang on a 61.8 level here where it's potentially turning around. So this is a long way from being home and hosed, I can assure you of that. And that's why we take profit before we get back into a silly situation. Once we've got that nice little profit in our, and I took profit here at the low, right? Once we've done that, we can afford to take that extra journey on board and have a smile on our face, because the worst thing that can happen is we come back. My stops are at entry now. The worst thing that can happen is we've made money. Happy days. The best thing that can happen is we get that massive, massive reward that potentially is available for us. So again, to answer your question, PL, I don't see any reason to trade right now if I'm not in this trade. I need to see more evidence. And if I'm to trade short, going back to what I just said, there's always another way to look at it. And the other way I would look at this, remember, if this is the neckline and we break it and retest it, then I'm a bull and I think price will go back to here. But if we break it and then re-break it and then retest it from below, that's giving me a big tick to exactly what I thought in the first place, because that's telling me that the buyers aren't serious here and they don't have the money in their trading account to push it back high. So that's the scenario. This is a very key area for that reason. If it breaks, retest, doesn't come back underneath, it's a very bullish sign, and I would definitely place an order there, long. The reverse is exactly the same. I'd place an order there short. But at the moment, I don't know. I really don't know, mate. So there you go. If the moving averages are telling you something, then happy days. But I don't use moving averages, so I really can't comment too much on that. I think we're at a definite, they call them inflection points, or some people call them inflection points. That'll do me. I'll call it an inflection point, but it's a key level. That's what I'm saying. So that's Euro Aussie. I think I've dealt with that one.
Sorry,
enough.
Jeff.
G'day, mate.
Sorry,
You're
mate.
right.
I'm in another call and I need to jump into Zoom on a different account, which means this is going to close down.
Okay, you're going to kick me out, is what he's saying.
I'm going to kick you out, yeah, and everybody else with you.
All right. Well, I'll give you one little tip. Pound CAD, if it comes back and tests this trade line now, there's a short on offer. There's a whole lot to talk about, but obviously we haven't got time, guys. There's other matters pressing. So I will bail out. And
thank you, Jeff.
There is no show tonight, guys, in US session because of the very same reason. We were pre-booked with the trading platform, or what they call those things, meeting platforms, prior to knowing that we were having tonight's session, which won't take place. So we'll be back tomorrow with both the UK and the US session, but there's no more tonight. Sorry.
Yeah. No. Sorry to the guys, and sorry to you as well. So it's a little bit rushed at the end here, but keep those FTSE trades on. Keep whatever Jeff has discussed with you on, and we'll be back same trade time, same trade channel, 5 to 8.
Don't be late. That's a date. See you guys.